Hey, what's going on, guys? My name is Daniel Kwok. I'm a real estate entrepreneur and also author of this book right here, 0 to 75 Units in 1 Year. In this video, we're gonna go ahead and talk about how to find deals that require no money down. So let's go ahead and get right into it. Now, guys, the most common and most popular way, and in my opinion, the path of least resistance when it comes to finding a deal that requires no money down is to go ahead and utilize what's known as seller financing. Now, if you don't know what seller financing is, I'll go ahead and draw it out for you guys really quickly. So there is you right there. That's you. And then we have the property. And of course, we have the seller. Now, in a typical situation, you would go to a bank and you would go ahead and get a loan, right? You would either get a residential mortgage or you would get a commercial mortgage, depending on what property you're going after. You would get the loan from the bank, sign all your documents, your agreements, pay for the underwriting and the appraisal, of course, and then you would utilize that money to go ahead and control and own that asset. In this situation with seller financing, you have the seller that operates as your bank as opposed to a traditional bank, meaning that you make the payments to the seller every single month, just like you would a bank. So as opposed to paying the mortgage to the bank, you go ahead and have the seller become your bank for you and you give the mortgage payment to the seller every single month. Now, what I like about it as well is that there's a lot more flexibility that you can have with your seller when it comes to seller financing than compared to a bank. Because, well, when you go to the bank, well, they tell you exactly how much interest rate that you're going to be charged. They tell you how many years, if it's 25-year amortization or 30-year amortization. They dictate how much money you put down. With you and the seller, there's much more flexibility. You guys get to dictate what's the down payment, what's the interest rate, however many years is this note going to go on for. And depending on the seller's situation, you can change and be flexible with those terms however much you like. So in doing so, you obtain control of the asset by having the seller finance you. Now, I get this question all the time. Well, Daniel, if the most popular, the path of least resistance way of executing deals that require no money down, if that's seller financing, well, how do we find these sellers that are open to doing seller financing? Well, that's the trick, guys. We don't find them, we create them. And please write that down. That's one of my biggest MOs in my real estate investing business, is that great deals, including seller financing. And I personally had deals where I've actually acquired half of all my units via seller financing. The best deals are not found, they are created. And I think that's very important for all of us to know because, well, it actually allows us to use our information, our negotiation skills to be able to create the best deals possible. Okay, so of course that brings us to the question, well, how do you create seller financing deals? Well, I'm glad you asked. So I'm gonna first provide you the 30,000-foot view on how to find and also create seller financing deals. Because just like anything, guys, especially in business, and like we talked about with part 1 of this YouTube series, is you gotta know your ideal client. And that ideal client is out there for the individuals who is a perfect fit for seller financing. We're gonna get to that a little bit later. But first, let's go ahead and talk about the 30,000-foot view in terms of how to create seller financing deals. And by the way, guys, this formula that I'm about to show you, you can apply it to anything you want. As a matter of fact, because it's so universal and you can apply it to anything you want, I call it the success formula. Now, the success formula is very simple. You first start out with the people. And as they say, business, especially real estate, is all about people. Real estate's not about properties, it's all about people. Now you find those people, then you identify their problems. And with those problems, you offer a solution. And you deliver that solution in the form of providing value. And last but not least, you go ahead and monetize that value. Now, let me show you what I mean by this. Now, when we start, we're gonna start with the people. Now, remember what we said, guys, in part 1 of this YouTube series, is that when it comes to selling seller financing or proposing seller financing, we don't sell, we create the space where individuals want to buy. So again, one of the beauties in seller financing is the flexibility that it allows. So when creating a space where people want to buy and they don't want to be sold to, well, let's look at 2 different types of sellers. Let's say seller number 1 is a 35-year-old landlord who bought the apartment complex 5 years ago. They spent a lot of time, updating it. They put some renovations, they increased the rent, and now the building's worth a lot more. And they want to find passive income, but they don't necessarily want to deal with the tenants. So the way we're going to structure that deal for them is, well, we're probably going to give them a sizable down payment so they can take care of their capital gains taxes. They can take care of other expenses that they put into, making the building look a lot nicer and raising the rents, therefore increasing the value. We might give them a low interest rate because, well, we already gave them such a high down payment, and they might be in a position where their money doesn't need to necessarily work for them as much as somebody who's a little bit older. And we might also give them a longer amortization schedule, like a 30-year amortization, because, well, if you're young and you're 35 years old, you want that to be as long as possible because, well, chances are you're just gonna be around longer. There's no other way to put it. Versus maybe a seller who's 75 years old and they've owned the property for 30 years versus a seller who might be 75 years old, and that situation is gonna look a little differently, right? Maybe they own the property for 30, 35, 40 years, and they've got the liquidity because they spent their entire life working and they have the liquidity to not need a bigger down payment. So we might structure a smaller down payment deal. We might structure maybe a little higher interest rate because they're really in a position in their life where they want their money working for them as opposed to them working for the money. Maybe somebody in their 30s or 35 may have that mentality, but not somebody in their 70s or 80s, right? They want their money working for them. And well, they might want a shorter amortization because I'm not gonna say, but you guys know why, right? So when it comes to starting with the people, we definitely need to have that in the back of our heads, knowing that we can structure deals and create spaces where they want to buy and not sell because we know who our audience is. And that's going to help tremendously in our negotiation process. Now, for a lot of you guys that are watching this video who may have watched another video, maybe you listened to a couple podcasts, maybe you already are familiar with what seller financing is, and your biggest hurdle right now is, oh, Daniel, I don't know how to get sellers to say yes to me in seller financing. I feel like I have to, I'm like pulling teeth over here trying to get individuals to say yes. And well, that was me initially, right? When I first started learning about seller financing, which by the way, when I first got started in real estate, I had negative $187.65 in my bank account. I had horrible credit. I didn't have any money to be able to invest. I had to do seller financing because there's no way in heck any bank was going to give me a loan, especially considering I started at 18 years old learning about real estate. So instead of having to beg for seller financing, when we use the success formula, we don't have to do that. Why? Because, well, we can go ahead and reverse engineer using the success formula to be able to figure out, number one, who is our ideal client when it comes to individuals that are more likely going to say yes. And also, how do we create a situation where they want to buy and not want to sell? So I'm going to share with you guys a story, right? So the story begins when I was 20 years old. I was at a real estate meetup and, I was talking to this commercial lender. As a matter of fact, I think he held the title of like junior vice president of commercial lending or something like that. And I was talking to him and I told him, hey, I want to buy, 50 rental properties one day. And, I want to do this, I want to do that. And by the way, with your bank, what are some of the perks that you can give me? And I still remember him asking me, well, what's your debt to income ratio? What's your credit score like? And after I answered all his questions, the guy literally laughed at me and he's saying, yeah, there's no way, even a chance that we're even gonna let you inside the building. So I had to do seller financing. So what I did was I started writing down a list. When it comes to creating a situation where people want to buy, I started creating a list. How can I get these sellers to want to say yes? How can I create a win-win scenario? And that for me started by listing off things that are valuable to the seller when it comes to seller financing. And I called that list seller's value proposition. As in, what are the things that they find valuable? As in, what are the things that when it comes to seller financing is a win for them? AKA, what are the benefits for the seller when it comes to seller financing? And after a week or two of not only researching, but asking my mentors, asking around different individuals, and even talking directly to sellers themselves, I found out that the top 3 things that individuals who own property love when it comes to seller financing are potential tax deference. Another thing is that they get to make money as the bank. Because think about who the richest and some of the largest entities in the world are. Well, it's the banks. And how do the banks make their money? Well, they lend out money and they make money off of the interest. But not just any interest, it's that amortized interest like what we talk about in our YouTube channel, where, hey, if the bank gives you a loan or a 30-year mortgage, that first payment that you make to the bank, chances are 70% of that is direct profit to the bank via interest. Check it out, guys. So that's number 2. Sellers want to be in the position of the largest and wealthiest entity in the world, which are the banks. So number 1, potential tax deference. And number 2, they like making money as the bank. And number 3, it created a certain lifestyle for them. Because guess what? If your money is making money for you, you're able to travel a little bit. You're able to have mailbox money coming in, as they say, and you're able to do the things that you really want to do with your life, and you get a lot of your time back. So long story short, after weeks and weeks of researching, every single reason came down to one of these 3 things. These 3 things were kind of the main reasons and the factors in terms of as to why a seller might want to do seller financing. And that's what led me to step number 2, which is, well, who are the individuals that are going to resonate with this? Who are the individuals that are going to, yeah, I want some of that. That's the most important for me. I want tax deference. I want my money to work for me. And, I want to be able to sustain a lifestyle where I'm able to travel and I'm able to see my family and et cetera, et cetera, et cetera. And after another week or 2 of really thinking about this and drilling down who this could be, I finally found my answer. And my answer in terms of who is going to resonate the most with the benefits of seller financing, I found it as seasoned landlords. And here's why. Here's why I believed at the time, and I still do, that seasoned landlords, and obviously seasoned is a substitute for another 3-letter word that starts with O and ends in D. I just don't want to say it, but seasoned landlords, the reason why I found them to resonate the most with this is because, think about it. If you're an individual who's 65 years old, 75 years old, and you own that property for more than 27 and a half years, and by the way, that 27 and a half is a significant number, that means you depreciated out all the depreciation in your property. And by the way, guys, of course, I'm not a tax professional. I'm not a licensed CPA. I'm just an entrepreneur, just giving away all my secrets, right? So at the end of the day, if you owned it for a long time, for more than 27 and a half years, well, chances are that you've depreciated it out and you're going to have an event called depreciation recapture, and you're going to have to pay taxes, predominantly ordinary income tax rate, on all that depreciation you've taken out during those years. Not to mention that chances are, if you own the property for more than 30 years, well, what's gonna happen to the property? Is the price going to go up or is it going to go down? Well, chances are if you own the property, you bought it 30 years ago, today, I wouldn't be surprised if it's triple or quadruple of what it was worth back in the 1990s, which was 30 years ago. So you pay what's known as long-term capital gains taxes. And as a matter of fact, in my experience with having spoken with hundreds of different individuals, a lot of them who are seasoned landlords who had owned their properties for more than 27 and a half, 30 years, most of them, if I give them a cash offer, their CPA tells them that they're only going to walk away with only 60 to 70% of what the money that they're actually quote unquote getting. And some of them, because of taxes, receive as little as 50% of what the purchase price actually is. So I knew that they were going to resonate with that potential tax deference at a much deeper level than your average landlord. And not to mention with the second reason, them being in a position where, hey, they want their money to work for them. I'm only in my late 20s, and yeah, as awesome as I want my money to work for me, I'd much rather put that back into my business where I know I'm gonna be doing a lot of the work and pushing and continuing to build. But somebody who's in their 70s or 80s or even 60s, well, they may not have the same amount of ambition and energy and hunger as I have. So they're really gonna resonate with that second reason as well. And number 3, of wanting to have a particular lifestyle, I think a lot of individuals in their 70s and 80s, well, they want to spend the golden years, right, as they call it. They want to spend those times traveling, seeing the world, maybe seeing their kids, some of them even their kids. They want to spend that time doing that as opposed to getting a phone call from a tenant and having to, get up at midnight and go fix the toilet, So all 3 of these things, I found that seasoned landlords resonate with those things more than your average landlord. So continuing on with this process of reverse engineering and creating a space where people want to buy, I started asking myself, well, how do I best find these individuals? AKA, how do I find my ideal client? Because now I identified who my ideal client is. It's seasoned landlords who've owned their properties for more than 27 and a half years. Now the question became, how do I find them? How do I find these individuals so that I can create the seller financing deal? I can create a scenario where I can buy properties with no money down and no credit of my own. So after masterminding again with individuals, which by the way, guys, I would highly recommend having a mastermind. Have 3 or 4 individuals that you connect with on a weekly basis, that you run ideas past and you pick their brain. And I recommend that for those 3 to 4 people, try to find individuals that are, maybe around your level of knowledge when it comes to real estate and experience, or better yet, more. Right? More knowledge and experience in the real estate investing space than what you do. As the old African proverb says, right? If you want to go fast, go alone. But if you want to go far, go together. Go as a team. So after masterminding with my individuals, after about a week or so, I found 3 ways to best find my ideal client, find individuals that are more likely going to help me create scenarios where I can buy properties, no money down. So number 1, was calling for rent signs. Now, I don't mean to spout out stereotypes, or I don't mean to do that. I don't want to hurt anybody's feelings, especially it's 2022, 2021. But seasoned landlords have a stereotype of not being able to work with technology all that well. So a lot of times what they do is they're a little old school. So they'll put out a sign in the front of their property that says for rent, and they'll typically put their number in front of it. So I remember I used to spend about 3-4 years ago, I used to spend the better half of my Saturday afternoon or Saturday morning driving around calling these for rent signs. And I would call the sign, and this is exactly what I would say. Hi, is this a number on the for rent sign that I saw? Hey, my name is Daniel Kwok. I'm a local real estate investor. I saw your sign and I wanted to see if you had any interest in actually selling the property. And by the way, guys, the reason why I didn't mention the address that the sign was, located in was because, well, if they have other properties, they're going to say, well, which property was it? Or which sign are you talking about? That relays information to me that if they don't want to sell this one, hey, maybe they've got another building that they want to sell. And I do that because why? When I typically call somebody and the individual doesn't recognize my number, what do people tend to do? They tend to hang up, right? So a lot of times I used to call twice. I used to leave a voicemail. I used to, shoot them a text, whatever I had to do to reach that individual and let them know that, hey, I'm interested in this property. Now, granted, if they put a for rent sign out, chances are they're going to pick up. Why? Because they know they put their number on a sign outside their property that said for rent. So in their mind, they're probably thinking, oh, it's an individual who wants to rent my building. Which, by the way, guys, if you do this, you will be cussed out a couple of times. It's happened to me. So do not be surprised if somebody goes, well, what are you, stupid? This sign is for, individuals that want to rent the property, not buy it. So again, if you get those conversations, no worries, it's just part of the business. Now, granted, when I did call these for rent signs, every 8 to 10 calls that I made, I would get at least one meeting with an individual to check out the property, sit down with them, discuss terms and what it looks like for me to buy the property. And sure enough, a lot of these individuals were 60 and up. And it created the situation. It made it easier for me to propose seller financing. Now, the second way I did it was also newspaper ads. Again, for the same reason of it's a little old school. These are the individuals, my ideal client that I'm looking for. So I would, rummage through the newspaper and I would look at the for rent. There was the job section and there was the for rent section. And I would call these numbers and do the same exact thing. Except, of course, I didn't mention the address as well. And the third and final thing is I would make connections with property managers. Now, the reason why I would do that is I would intentionally find property managers who had been in the area and in business for at least 20 years. Well, why is that? Because these individuals knew the individuals who had been in the game for 20, 30, 40 years. If you're in the same industry for 20, 30, 40 years in the same area, you're bound to know each other and you're going to create relationships. That's just the name of the game. It's the nature of the beast, right? So I used to call these property managers and I would create a win-win scenario. And the way I would do that is I would ask them, hey, how would you like to have a scenario where you never lose any of your managing units ever again? And I would sit down with them and I say, hey, Bob, hey, John, hey, Ed, what's the minimum number of units you have to have under management for you to stay in business? And then what's that number you want to get to? And some would say, oh, I need at least 150 units that I'm managing before, I have to start firing people and I start pulling the plug on certain things. And this year, I would love to get to 500 units. I'm at 330 right now. If I could get to 500 by the end of the year, man, I will be, I'd be able to hire somebody else. I'd make more money. Business would do a lot better. And after that answer, I would ask them, well, how would you like to have a scenario where you never lose business ever again? Where that 330 number you're at right now never gets any lower and it can only go up. How would you like to have that scenario? Now, obviously, every single property manager is going to say, yes, absolutely. So what I would do is I would say, well, John, Ed, Chris, the next time you have a client that wants to sell their building, let me know. Give me a call and I'll be the one to buy that building. That way you never lose business ever again, which by the way, worked out in my favor because it made the underwriting process, the analysis process that much better. Because think about it. If you've got the guy managing that property on your side, on your team, and they're able to give you all the income and all the expenses right there, and you don't have to rely on a broker or you don't have to rely on the seller to give you those numbers, that's 10 times better. Why? Because a broker or the seller, think about it, they want me to pay a high of a price as I possibly can. So of course they're going to mess with the numbers. Of course they're going to minimize the expenses and maximize the income. Whereas if I'm working with a property manager and they're the ones who've been managing it for the last 15, 20 years, I've got all the information I need. I've got the truth right then and there. So for me, it made negotiations a lot easier because the numbers were reliable and they were true every step of the way. And not only that, but the property managers got a win too because, well, they didn't have to lose any of their units that they were managing. Now, some may say in this position, well, Daniel, what if you're self-managing? What if you don't want that property manager because they suck at their job? Well, if that's the case, I used to tell my property managers, well, guess what? If you're managing other people's property, you have a managing broker's license. You can make a commission off of you having them call me first because, hey, I know I'm going to buy it. I'm going to raise enough capital, which by the way, of course, as I mentioned in part 1 of our YouTube series, I think is the most important part of real estate, the art of raising capital. And I used to tell these property managers, look, I've got $3-4 million committed in my pipeline of investors that I've spoken to the last 3 to 6 months. I'll buy the deal. Right? And when you have that capital raise, guys, when you're able to approach the table, whether it's a property manager or a seller, and you're able to tell them, boom, I got $6 to $8 million in my pipeline. These are individuals who have verbally committed their capital to me. I'm ready to buy the deal. Let's roll. Right? It puts you in a much better position to be able to negotiate, create owner financing, you name it. Because they know they're talking to the real deal. They're talking to the guy, right? So that's the third and final thing that I used to do in order to find individuals who are my ideal client. Now, here's the next question. The next question is, okay, we found them. How do we get them to say yes to seller financing? Now, obviously, I used to ask a lot of really good, insightful, educated questions. I would utilize what I call the goals method, which is actually invented by my friend Levi McPherson, which is actually talked about in this book right here in chapter 12. But one of the things I used to use is called the line strategy. Now, of course, after asking a bunch of questions and having a little bit of back and forth, the way that I used to get that final yes, the way I used to get them to say, all right, you're in. We've got a deal. Let's go ahead and shake on it. The way I used to do that, my final push, my anchor, as I like to call it, is I used to just grab out a sheet of paper, an empty one, obviously not this big, just an 8x11. And I used to draw a line right down the middle. And I say, hey, John, look, at the end of the day, it's your decision. I'm not going to try to sway you one way or another. I'm just here to see what I can do to help you in your situation. So I'm going to give you 2 options. So here's option number 1. Option number 1 is if I give you all cash. You're asking $1 million for this 8-unit building that you want to sell. Let's say this is a scenario that I give you all cash, $1 million. Now, I'm not saying I will. I'm not saying I won't. Let's just say for the sake of the example, I give you $1 million in cash, right? On the other side is what we've been talking about this entire time, where you actually get to be the bank, right? So you are the bank. Let's call it seller financing. And by the way, guys, when I used to negotiate for seller financing, that word didn't even get brought up. I would just say, hey, it's just a scenario where you get to be the bank. right? Because think about it. If it's seller financing, a lot of times there could be negative connotations, right? Maybe the seller heard a story from a friend, it's like, oh, John, you never want to do seller financing. They gave me the property back 3 years later and it was all, dirtied up and, I had to deal with and all this stuff, which by the way, real quick, golden nugget, the best way to object it is to say, John, if that's what you're afraid of, why don't we put a clause, an addendum in the contract that I am subject to an inspection every 2 years. We split the cost of the inspection and it's an inspector of your choosing. That way, that scenario can never play out. And I'm subject to a fine if I cannot meet these inspection requirements within 45 days of the inspection. Right? Boom. The beauty of seller financing, again, the flexibility, being able to add that addendums like that into the contract to be able to relieve a lot of the fears that sellers have with seller financing. But anyways, yeah, when I used to negotiate, I hardly used to even bring it up. I would just say scenarios where, hey, you're the bank. That has a much more positive connotation saying, hey, you're the bank, as opposed to, hey, give me seller financing. I mean, imagine if you and I were negotiating and I said, hey, do you want to do seller financing versus, hey, do you want to be the bank? I mean, which sounds better? I think the second option sounds a little bit better. Okay, so going back to the line strategy. I used to sit down with the seller. Most of the time we were in a coffee shop or a restaurant, and I used to say, okay, this is a scenario where I give you $1 million cash. You're gonna have ordinary income tax. You're gonna have capital gains because you've owned this property for more than 27 and a half years. And you're gonna have closing costs, and by the end of it, and by the way, with the experience that I have in this industry, most sellers in this situation, if I were to give them $1 million cash, most of them walk away with only 60 to 70%, which by the way is $600,000 to $700,000. I'm gonna say $700,000 to give you the benefit of the doubt, right? Let's say we're going conservative, and chances are you're gonna walk away with $700,000 if I were to give you $1 million right now, exactly what you're asking for. Because of these different taxes and closing costs, you're gonna walk away with $700,000. Now, it's very important to know here, I'm gonna give you guys this disclaimer. One of the things I used to tell them at least 3 times in negotiating is, look, I don't know what your CPA is going to say. You may have some loss carry forwards, meaning that you lost money in previous years and you're able to take those losses and deduct them this year when you're doing your taxes. I don't know if you have loss carry. I don't know if you have any tax credits. I have no idea what your personal tax situation is. So that's $700,000. It might be $900,000. It might be $950,000. But I need you to ask your CPA. I need you to ask your tax professional, what is your tax consequences if you were to sell this thing all cash? Now, it's important to note here that they do not mention that the other option is seller financing, because just my experience, guys. In my experience, a lot of the seller's CPA or attorney try talking the seller out of seller financing because of all the risks of, hey, what if I get this property back in 3 years and it's horrible? Or 9 times out of 10, CPAs, attorneys try talking the sellers out of it because, well, they don't have a lot of information on how it actually works. They don't realize that there's a lot of things that you could do with the contract to be able to mitigate a lot of the risks. So one of the things I used to do is, hey, if it makes you feel comfortable, why don't you and I get on the phone with your CPA and I'd be more than happy to describe this situation and how it works, right? Or better yet, let me also get my CPA involved and they could talk it out and, have that conversation. Because the last thing that you want is somebody else inside the seller's ear telling them not to do something, especially if they're not educated on what that other option is. Now, if they were educated on what the other option was and they're advising the seller not to do it, absolutely, that's fantastic. Guys, do not offer them seller financing unless you think it's viable for them. Unless you think it's actually going to help them, do not offer seller financing. At the end of the day, remember the success formula, guys. We're providing solutions to their problem, and that's how we deliver the value. If the solution is not seller financing, don't offer them seller financing. Okay, so going back to the line strategy, I used to draw this part out, $700,000 on the bottom, and then on the second I say, now again, this is a situation where you are the bank. So let's say that I buy this property for $1 million. which, by the way, if the numbers work out, I do the due diligence and it checks out, I'm cash flowing, I will give you that $1 million with seller financing. I don't know if I'm gonna do that with cash, right? Because now you're talking about, cash up front. I don't know if I'm gonna do that. So chances are I might offer something a little lower. But with seller financing, if the numbers work out, I'll give you $1 million with that offer. So let's say that on this side, I offer you 1 million, as I said just now. And let's say I give you 4% in interest every single year. And let's say we do a 25-year amortization. Now, based on those numbers, right, I've got a mortgage calculator right here. And let's say that we also do, 10% down. Now, by the way, if you're in a situation where you need more than 10% down, I'd be more than happy to give that to you. But I'm just gonna go ahead and use 10%. Now, the reason why I do 10% down is because, hey, maybe they want you to have some skin in the game. But just like what this video is all about, if you wanna create a situation where it's no money down, you can make the case of, hey, I'll do no money down because that way it's gonna, you don't have to pay taxes on that down payment and your monthly payment is going to get a lot bigger the less I put down. So not only is it advantageous for you tax-wise for me to do no money down, but that monthly payment is going to be a lot bigger if that's no money down. So let's go ahead and put no money down, right? So we got 0% down as our down payment, our interest rate's 4%, and our years that we're amortizing it is 25 years. And when we look at all the way at the end here, like I have in my mortgage calculator, I see that total payment out of that 30 years, that total payment comes out to be about $1.6 million. It's actually 1.583, but just to make it simple, cowboy math, I'm gonna say $1.6 million. And at this point, after drawing this out in front of him, I used to ask him, now John, again, I can do both. I can go to the bank right now. Rates are super cheap. They're giving me a great deal. I can go to the bank and get you a cash offer. Again, it's probably not gonna be $1 million, but you're gonna walk away with probably about $700,000 if best case scenario. Now on this side, I'm gonna give you $1.6 million. And not only that, but it's a situation where your money works for you, you get some potential tax deference, and you're able to live a little bit more of the lifestyle that you're wanting to live. So John, would you like to walk away with $700,000 or would you like to walk away with $1.6 million? And at that point, you just stay silent. I used to just sit back at this point and just really listen to what the response is. Now, most of the time, this would be the response. They'd say, well, of course, I'm gonna go with the 1.6 million, but let's get a little bit more information on that. And again, this is good, right? This is really good. This is where, we go back to where, we get their CPA involved, we do a conference call, we get my CPA, my tax, my attorney, and we discuss a little bit more of the details. But most of the time, the longer and deeper that conversation goes, the more it benefits this side right here. So again, guys, let me finish out this video by prefacing, if it doesn't make sense for the seller to offer them seller financing, do not offer them seller financing. At the end of the day, remember guys, the success formula, we're all about find the people, identify the problems, give the solution, provide them the value, and then monetize that value. So hope you guys enjoyed the video. Don't forget to subscribe. And if you found this video to be informative, go ahead and smash that like button and share it with your friends who you feel like need it as well. So thank you guys so much. I'll see you in part 4, the last and final video of our YouTube series.